The world woke up to a seismic shift in global trade. The BRICS nations, Brazil, Russia, India, China, South Africa, and new members, have imposed sweeping tariffs on key U.S. exports. Announced at the BRICS summit in Kazan, this is the most significant challenge to American economic dominance in a generation. The implications are vast, affecting everything from groceries in Ohio to tech in Silicon Valley. This isn't just about taxes, it's a fundamental redrawing of the global economic map. For decades, the US dollar has been the world's reserve currency, but BRICS has been quietly building an alternative system. These tariffs are a calculated maneuver, signaling that a multipolar world is no longer theoretical, it's here. The timing is strategic, hitting the US during political transition and economic uncertainty. BRICS leaders frame this as a move for fairer trade, countering decades of what they call American protectionism. Whether seen as bold or aggressive, the rules of global trade have changed. The world is watching for the US response. In the coming sections, we'll break down what happened, the history of BRICS, the tariffs' impact, and what it means for your future. Stay with us. 8. To grasp today's news, we need to understand BRICS. Originally coined in 2001, BRICS grouped Brazil, Russia, India, and China. South Africa joined in 2010. Once a loose forum, BRICS has evolved into a powerful geopolitical alliance. The creation of the New Development Bank in 2014 was a turning point, offering an alternative to Western financial institutions and using local currencies. In 2024, the addition of Saudi Arabia, UAE, Iran, Egypt, and Ethiopia transformed BRICS into a bloc representing nearly half the world's population and controlling vast energy resources. This expansion consolidated control over critical commodities and supply chains, giving BRICS unprecedented leverage. Tariffs are now economic weapons, not just taxes. What makes this move historic is its scale and coordination. A coalition challenging the US-led global trading system. The world has never seen a direct challenge like this before. Let's break down the BRICS tariffs, set to take effect October 1, 2025. These are not blanket taxes, but targeted strikes at sensitive US sectors. A 25% tariff hits US agricultural products, soybeans, corn, pork. A 30% tariff targets heavy machinery and industrial equipment. Most notably, a 35% tariff will be imposed on high-tech goods, semiconductors, electric vehicles, and select pharmaceuticals. These tariffs impact $500 billion in U.S. exports annually, with agriculture alone accounting for $80 billion. The aggressive timeline gives U.S. businesses less than 3 weeks to adapt. BRICS leaders claim this is a response to destabilizing unilateral actions by the U.S., positioning their move as defensive. The targeted goods reveal a deep understanding of U.S. economic pressure points: agriculture, manufacturing, and tech. This is a calculated list, designed for maximum economic and political impact. The message: BRICS now has the power to force a response from Washington. The world stage has shifted. The U.S. must now decide how to respond. Why now? BRICS' frustration with U.S. economic policy has been building for years. They cite the weaponization of the US dollar and frequent use of sanctions as overreach. BRICS has worked to create parallel financial systems like the NDB and a proposed common currency to insulate themselves. These tariffs are the next step in their de-dollarization strategy. US trade policy, especially recent tariffs, set a precedent. BRICS leaders argue they're simply responding in kind. Russian President Putin said, "We did not start this trade war, but we are prepared to see it through." The move is framed as defending sovereignty against American unilateralism. Beyond retaliation, BRICS aims to build a multipolar world order, challenging U.S. leadership. This is a bold assertion of their arrival as a global counterweight. Domestic politics also play a role. Standing up to the U.S. boosts nationalist sentiment at home. For BRICS leaders, this is about consolidating power domestically and projecting strength abroad. The coordinated tariffs are both a strategic and political tool. The world is watching the fallout. The tariffs sent shockwaves through the U.S. economy. The Dow plunged over 1,200 points, its worst drop of the year. Agricultural giants and tech companies lost billions in market value. For soybean farmers, a 25% tariff from China means losing their biggest customer overnight. Manufacturers like Caterpillar face drying export orders, threatening jobs and supply chains. The economic shock could reignite inflation, disrupt global supply chains, and raise costs for American companies. If U.S. goods can't be sold abroad, domestic markets could be flooded, causing price drops in some sectors. But broader uncertainty and potential escalation could drive up prices for imported goods, squeezing American families. Politically, lawmakers from affected states are demanding action, while business lobbies prepare for a fight. The divide in Washington is deep. Some urge negotiation, others demand retaliation. The paralysis comes at a time when swift strategy is desperately needed. The stakes for American industries and workers are enormous. The pressure on policymakers is mounting. Beyond the headlines, ordinary Americans are feeling the pain. Sarah Jenkins, an Iowa soybean farmer, fears losing her family farm after investing in new equipment. Her biggest customer is gone overnight. In Peoria, Illinois, factory workers worry about layoffs as export lines face a 30% tariff. The anxiety is real. It's not just jobs, but mortgages and college funds at stake. The ripple effects hit entire communities. Truck drivers, dock workers, and local businesses all feel the strain. When a major industry suffers, the local economy suffers too. Restaurants, car dealerships, and schools all take a hit. A global trade dispute quickly becomes a local crisis. For consumers, retaliatory tariffs could mean higher prices for electronics, clothing, coffee, and gasoline. The cost of living crisis deepens, forcing families to make tough choices. For millions, this trade war is not abstract, it's a daily struggle. The human cost is mounting, the crisis is real and growing. The BRICS tariffs hit Washington like a bombshell. The White House called the move aggressive economic coercion and promised a swift response, but uncertainty reigns. The administration faces a dilemma: appear weak or risk a global recession by escalating. Congress is fractured. Some senators urge calm and diplomacy, fearing more pain for farmers and manufacturers. Others demand immediate retaliation, proposing sweeping counter tariffs and financial sanctions. Political infighting creates paralysis as the October 1st deadline looms. U.S. allies watch nervously, caught between economic titans. The administration must rally allies and craft a response that avoids disaster. The choices made now will define international relations for years. The stakes have never been higher. Leading experts warn this is a paradigm shift in global economics. Dr. Amelia Thorne calls it a coordinated geopolitical maneuver, not just a trade dispute. The risk, a cascading failure in the global trading system. Mark Chen, former U.S. trade representative, warns that retaliation could trigger a spiral of counter tariffs, forcing allies to choose sides. Global supply chains could unravel in months, raising the risk of recession. The U.S. dollar's dominance is also at stake. If BRICS prices energy and other currencies, the dollar's status as the world's reserve currency could erode. This would have profound consequences for U.S. borrowing costs and purchasing power. Experts urge a two-pronged approach: shore up alliances and pursue quiet, pragmatic diplomacy. Aggressive retaliation is risky. De-escalation, though difficult, is essential. This is a test of statecraft and economic resilience. Bluster won't solve it. Only smart, patient diplomacy might. The world is watching for leadership. The next moves are critical. As the dust settles, the world waits for the next move. The U.S. faces a choice: retaliate and risk a global trade war, or negotiate and risk appearing weak. Expect frantic diplomacy. U.S. officials will seek support from allies and open back-channel talks with BRICS. The upcoming G20 summit in Rio is now the year's most important diplomatic event. The fate of the global economy could hinge on those negotiations. For businesses, it's time to plan for disruption, diversify markets, stress-test finances, and adapt supply chains. For families, brace for renewed inflation and economic volatility. Careful budgeting and staying informed are more important than ever. This is a turning point in modern history. The U.S. can no longer take its preeminence for granted. The call to action: stay engaged, understand the stakes, and make your voice heard. The decisions made now will shape the economic landscape for a generation. The future of global trade is being written in real time. The story is far from over.